Hello everyone, this is Real Forex Strategy 247 and we're about to dive into knowing about Forex. Now this today's video is going to be a run through. Like I'm not going to go really deep into trading. I'm just going to tell you guys about some things, some vital things you need to know before trading, and some of these rules must not be broken. Some of these rules are very important. I'm just going to tell you what you see in the market. Okay, like this first screen now. What is on this first screen now is a chart, my personal chart, my personal technical analysis chart. So I need to say that the forex market is made up of the markets. The technical part of the forex market is made up of candlestick, and the chart we're going to be using, there are about three types of charts. There's a line chart, there's a bar chart, and there's a candlestick chart. Now we are going to be using the candlestick chart because that's the best chart there is. That is the most useful chart. You open any trader's phone all over the world, or their computer, any whatsoever gadget they use, and you see that they use the candlestick chart. No one uses line chart or bar chart to analyze technically. So what we are seeing in front of us, let me just zoom this in. What we're seeing in front of us now, a bunch of candlesticks, right? I'm not going to be really talking about candlestick in this video. We're going to be talking about candlestick in a later video, but what you see in here, a bunch of candlestick. Let me just bring up my pen tool. Now this is a candlestick, this is a candlestick, this is a candlestick, this is a candlestick. All these are candlestick formation. Now bunch of candlestick forming is what we call candlestick charts. When you see a bar chart, you only see bars. You only see bars in a bar chart, and on a line chart you only see line. I know why I'm talking about candlestick, because we're going to be diving into the market later. So I need you to know that Forex is all about these candlesticks going up and down. If you're not conversant with it, when you open a chart, you think that is some kind of mathematics equation that cannot be solved if you don't know your way around it. So what I'm trying to do now, I want to teach you how to know your way around the forex market. And I know that we have like beginners from the scratch, right? I know some of you are already into trading, or perhaps you are into trading and you don't make money off of it because you don't have a good analysis of the market. You don't understand the market very well. But there are some of us right here that don't know anything. They just hear forex, but they don't know anything about it. So that's why I'm starting it like this for the beginners. So let me just clean all this off. Just erase this. Okay. So candlesticks makes up the chart in forex. So let's just continue. I needed to bring that into limelight, because I know what we're going to be going into later, and we're going to go into charts. We're going to be talking about trend line, and you can see on the chart, you can see bunch of lines. You can see a red line, Let me bring out my pen. So again, you can see this red line going up. You can see another red line going down. We are going to be talking about why I put that there and how to use it. I don't want to spend much time, but it's Forex. There's no way I'm not going to spend much time. So let's just dive into it. Okay, let's move on. So first thing we're going to learn it. What is Forex? Forex is an acronym. As you all know, it simply means foreign exchange. The FOR stands for the foreign, and the EX stands for exchange. I hope you got that. Forex is an acronym, which simply means foreign exchange. FOR stands for foreign, EX stands for the exchange. Forex is the exchange of one country currency to another in order to do business. Sorry, that message just popped up in the screen. So okay, let's just continue. The exchange of one country currency to another in order to do business. It's just like you have naira. I know most of all you guys right now you have naira. So you buy the dollar, right? You buy the dollar when it was low. Okay, let's just say dollar was 150 naira some couple of years ago. When some couple of years ago, naira was 150 to a dollar. Imagine buying naira. Imagine buying the dollar with when it was 150 naira, and you kept that dollar in a private account, right? And you came back this year, like right now. I think dollar is around 380 naira or 400 naira. Imagine you bought it then as 150. Now you exchange it back. Now you sold your dollar and you change it back to naira. How much naira will you be receiving for that dollar? That would be like 400 naira. You'll be receiving 400 naira. You bought it 150. Now you are selling it for 400. So that is just what Forex is. Exchange of one country currency to another. So I need to clarify all this so that you know what we are going into, right? For the beginners, I know some of you are learned. You know one or two things about Forex, but we have some beginners in the house that don't know anything, and they actually say that I should start from scratch. That's why I have to do it like this. So before the year 1994, retail trading was not available as we have it now. It was meant for the big players with a minimum capital of $1 million. In the late 1990s, the interbank broke the barrier to bring trading to small individuals, speculative investors like us. Now, before the year 1994, we, traders like us with minimum capital of like $500, even $1,000, we were not able to trade in the market. It was meant for the big boys. I mean by big boys, like the Jeff Bezos, the Bill Gates, people with big money to spend. Imagine buying one currency for $1 million. Now you bought a currency worth of $1 million and you expect it to rise. Can you imagine how much money you're going to be making? Imagine holding you used 150 million naira. 150 million naira to buy the dollar when it was 150 per dollar, and now you are selling it. You are now selling everything this year when it's now 400 per dollar. How much are you going to gain? You're going to be selling it for about 400 million. You're going to be gaining 400 million naira. You bought it 150 million naira before. Now you are selling it and you're gaining like 400 million naira. Do you see how crazy the market is? That's how it is. That's how you make money in the forex market. But those are for the big boys. You and I cannot buy a currency for $1 million, right? You cannot buy any currency for 1 million naira. So the interbank actually broke that barrier and was able to bring the forex market to retail traders like you and I, so that we would be able to make money off of it. Isn't that great? They're very, very thoughtful of them. I don't know. I don't know what some people would have done if there was no trading. Like trading has actually, helped lots of people, and that is why I'm trying to make it happen to most of you viewing this right now. Okay, the forex market is the largest marketplace in the world, which is worth more than $1.5 trillion. Now, what this actually means is every day that forex is traded, every day traders trade up to $1.5 trillion every single day. Now, all the traders in the world combined, every single day, like Monday to Friday, we exchange currency worth $1.5 trillion. I don't know if you know what trillion is. It's a very, very huge amount of money. There is no trillionaire in the world right now. I don't even think in the next 30 years there will be a trillionaire, or 40 or 50. A trillionaire, no. So that is how big the forex market is. We exchange $1.5 trillion every single day. So moving on. Why should you trade forex? You know why. I know you know why you're here. You want to make money. We all want to make money. That's why we trade forex. The only equipment needed for this business is your gadgets and data. You don't really need much. The phone you use to do your Facebook, your Twitter, your Instagram, and the data, the phone and the data you use to do all those stuff without earning anything back, you can use that tool to trade the forex market and actually make money. Yeah. So it is maneuverable. In other words, it's mobile. You can travel across the globe, and your business is just in your back pocket. And that's why you should trade forex. You don't need, when you're traveling, you don't need someone to help you look after your business. Your business moves everywhere with you. You don't have to keep someone, okay, please help me watch my business. So I keep selling, I keep making money. No, you don't need that with forex. You take it everywhere you go. You travel across the globe, and your forex market is in your back pocket, and you just remove your phone, whether you use a laptop or a phone whatsoever. It could be in your backpack. It could be anywhere. So far, just know that you can it's mobile. You can carry it everywhere you go. So moving on, the amount of money you make is dependent on who is trading and his or her risk management. That it's very, very important to understand forex psychology, risk management. When you have a business, you know that you have to manage it so that you don't lose money. That's forex is like a whole business, a full business in one. You're just holding a whole business in your hand. You have to do the risk management. You have to know, you have to invest. You have to trade it. You are the trader. You are the investor and you're the trader, right? And you have to know how to manage your risks. In later videos, I'm going to go in depth about how to manage, and I'm going to tell you about pips, lots, size. You have to know all this so that you know how to manage your trading. There are lots of people who lose money in forex trading. I'm like, okay, you've gotten your risk management wrong, and you put your emotion. Forex is not, you don't have to bring your emotion into forex. Forex is a business. You either get paid or you don't. You can't bring your emotion to it. Your emotion will not earn you money. So when you're in your forex, when you're on the chart, just put your emotion aside. No one cares about your emotion. Follow the rules. It's all about rules. When you follow the rules, you make money. If you don't follow the rules, you're going to lose money. Yeah. Follow the rules, make money. Don't follow the rules, lose money. Bring your emotion, and for example, you click buy where you were not supposed to click buy, and you expect the market to go up in your favor. No, the market will not just go up in your favor because you want it to. The market will go anywhere it wishes to go. All you have to do is follow it where it's going. You cannot, one man is a $1.5 trillion market. One man cannot just change the movement of a trade, of a chart. You cannot change the movement. You just have to follow the movement. You have to flow with it. You have to flow with it. That's what forex is about. You have to follow where the trend is going, and that's why I went in depth into trend line, how to recognize trend in this video, because I know that most people don't know this, and that is very, very important. You have to know the trend. The trend is your friend. Follow the market and you make money. That's just it. Follow the market and you make money. Don't follow the market and you lose money. It's just simple. I think I can move on to the next phase now. Okay, now about the trend I talked about so far. This is a live market. This is raw market movement, and this is a downtrend. But when the market is going down, it's called downtrend. When the market goes up, it's called uptrend. And there are things you need to know about this movement. The forex market will not just go down straightforward. It's like a wave. It waves up, waves down, waves up, waves down. I'm going to teach you how to recognize when it's waving down, so you understand the movement. Now, so right now, let me bring up my pencil. They are what we call all these things. Okay. Right now, you can see this whole market. Let me bring up my pen too. This whole market right now is a downtrend. So, how do you recognize a downtrend? You'll see you'll see a lower high and a lower low. That the downtrend is made up of lower high and lower low. What do I mean by lower high? Lower high means, okay, this high is higher than this high, and this high is higher than this high. So the high becomes lower as it goes down, and the low becomes lower as it goes down. Now this is a lower low and this is a lower low. You can just see how the lows just goes down. Let me clean this off. You can see how the low just goes down. it's a bit messy. I have to, tidy things up so that it doesn't look too messy. Okay, I'm good to go. Now you can see. Now, that is what the forex market is. When you see a downtrend, you would see that it's made up of lower highs, lower low, lower high, lower low, lower high, lower low, lower high. And when this lower high gets broken, then we expect the market to turn. I'll clean this again. I hope you guys are following me. And if you have any question, please feel free to ask. I know there will be lots of questions. I will answer your questions. Now, to the right hand side, you can see a line movement of a downtrend. When a downtrend, before a downtrend begins, it was on an uptrend before. Before a downtrend begins, a low before a downtrend begins, you would see something like this. It was previously on a uptrend, then you see a break of that trend. You'd see a break of that trend. This is just a line, so this is a raw market movement. This is a raw market movement, and this is just an illustration of a market movement, how the market move. You'd see that it was on a downtrend, then immediately around this section, one high got broken up. Once it gets broken up like that, you automatically know that, okay, the downtrend is all over. Let me clean this again. The downtrend is over, and you need to look elsewhere. There are lots of things to take into perspective to know that a downtrend is over. Like something like this. It was previously a lower low, lower low, lower low. Now this other low did not break this low, so automatically when this high, this former lower high, gets broken, you know that, okay, the trend is about to change into an uptrend. Okay, I always like to tidy up everything I do, so that forgive me if I am taking time to erase the board every time. And let me just, so let's move on to the next phase. Now this is a raw market movement downtrend. Now we're going to go to the raw market movement uptrend. Now you see exactly what I explained on the downtrend is what happens on an uptrend, only the other way around. This time, instead of going down, it's going up. You can see series of you see higher low. Uptrends are made up of higher low and higher high, just like how downtrend is made up of lower low and higher low. So uptrend is made up of higher low and higher high, higher low and higher high, higher low, higher high. Once a low gets broken, then you know that it wants to start a down trend. It's just simple. You have to, this is the rule. Please, I need you guys to keep the rules. The rules will make you make money. If you don't follow the rules, you're not going to make money. I need you guys to follow the rules. Imagine selling this market now. Okay, imagine selling here. Imagine selling here, and you start selling here. You want the market to go down. A low has not been broken. Then the market keeps on going high, and you lose lots of money. Lots of money lost. So you can't cheat the market. You just have to follow the market, follow the rules, and you're going to make money massively from Forex. And I know why I'm saying this. There are some traders on board that have not been doing very well, and I think that this could be one of the problem, or their analysis is not concrete, right? The analysis is not concrete. Just tidy this up a bit. I don't like the way everything just look rough, scattered. I love tidying up everything I do. So like what we said on the downtrend, this is just a raw market movement. This is a real chart, but this is just an illustration of what an uptrend is. You can see the higher high, higher low, higher high, higher low, higher high, higher low, higher high. So that's just it. That's what it made up of. Trend. You have to recognize trend. All right. We always have to recognize trend to make money in Forex. If we don't recognize trend and we trade against the trend, then we're not going to make money in the Forex market. I know why I keep emphasizing and telling you about this, because lots of traders would learn all this and still go and do otherwise and expect to make money, and it's crazy how that happens. Okay, let's continue this uptrend. Let's just continue. Now, I don't know, I didn't state it before. The Forex market is made up of 3 different movements. We have the downtrend, we have the uptrend, and we have the sideways. This sideways trend, we call it sideways trend, consolidation, or congestion, or range. You would see varieties of traders, they'll call it different names. They can either call it a sideways trend, consolidation, congestion, or range. That is the reason why I put everything here on the board, so that everyone would see it. Now, what's this consolidation? This is a sideways trend. What is sideways trend made up of? It is made up of equal high and equal low. Equal high and equal low. Now, when you see equal high and equal low, there is no trend. The market is just going sideways. You need to wait for a trend. Like, remember what I said, when you follow the trend, you will make money. If you don't follow the trend, you lose money. Now, if you see a sideways market and you are not a professional, I as a professional, I know how to trade a range or a consolidation. I know how to trade it. There's a rule to trading it, and I'm going to teach you guys. I don't have anything to hide. I need people to be able, my brothers and sisters needs to know how to make money and make money off of this stuff. It's a rule. This is a sideways trend. This is an illustration of a sideways trend. You can see that there is no there's no trend. It's actually going sideways. It's straight line. If you have to draw a line, like I drew a line through it now, it's straight line until there is a trend like this, or a trend up. Then you make money off of the trend up. But when it's on a sideways trend like this, then there's no making money. It's just, you just have to wait for a trend. This can actually happen and continue up. It doesn't necessarily need to be a down, reverse back down. Well, let me tidy this off the board. Sorry, taking time, I know. I wanted to make this video as short as possible, but there's no way I'm going to make this. Forex market is like a whole different ball game. No one knows about it until you learn it. So you have to really focus and learn. You have to really focus and learn it. Let's just continue. So I have made known a downtrend, uptrend, and a sideways trend. So I believe everybody understand what trend is now. Or we're going to still talk about trend and consolidation and stuff. So let's just move on. Okay, now how to spot a trend. Like we said earlier, a downtrend is made up of lower highs and lower low, lower highs and lower low, while an uptrend is made up of higher low and higher high, higher low and higher high. So there are tools in the MT4. MT4 is like an instrument used for trading. So there is an instrument in the MT4 we use to recognize if a trend is uptrend or downtrend. That's what we're going to be checking. If a trend is uptrend or downtrend. So there are two ways to spot a trend. It's either we use a trend line. It's either we use a trend line or exponential moving average, which is also known as EMA. Exponential moving average, also known as EMA. And this EMA, in another video, in a video that we're going to be dealing mostly about EMA, I'm going to teach you about how to set up the 200 EMA. The 200 EMA, when you set your EMA, you have to make it 200 so that you would get the real value of that EMA. If you make use of any other number except for 200, then it will cost you, right? It will cost you. There are other numbers used, but those are for short-term trends. But if you want to know a long-term trend, you use the 200 EMA, which is also called exponential moving average. Exponential moving average. So let's tidy this up. Now, those are the two ways to spot trends. We make use of trend line and exponential moving average. Exponential moving average. Let's move on. Now, this is an uptrend. As you can see, series of higher highs and higher lows. Now, this is how a trend line works. When you see an higher high and an higher low twice, okay, for example, a market was on a downtrend Oh, sorry about that. Let's make use of our pen tool again. Pen tool is very, very important in this lecture, because without the pen tool, we will not know what we're doing. So imagine we were on a downtrend like this. Immediately there is something like this. A retracement. What you have to do is, this tool I call trend line, you have to bring it out. I'm going to be teaching you how to bring it out when I really go in depth into the MT4 and how to use MT4. I'm going to teach you about everything you need to learn about bringing out the trend line tool. So what you need to do is bring out your trend line and connect the trend line to the first low and the second higher low, then move it to the future. Like you can see here, you can see this. I know the screen is a bit, the chart is a bit blurry, but you can actually see this trend line going up. You can see the trend line going up. You can see that trend line going up, and you can see the red spot where the trend line, where the market touches the trend line. So you run it from the first to the second, then you pull it into the future. That's how to use a trend line. That is how to spot a trend using trend line. And once that trend line gets broken, it automatically means that the market is about to start a downtrend. Once a trend line gets broken, it automatically means the trend is about to change from being an uptrend into being a downtrend. Imagine this breaks this trend line down. And use my pen to imagine. Okay. Imagine this trend breaking this trend line down. Oh, that's too small. The brush is too small. Okay, I need to increase it. Okay. Imagine this trend breaking the trend line like that. What happens? You automatically know that, okay, since this trend line is broken, I believe perhaps if this market pulls back up, then I can actually connect a downtrend to it, a downtrend line. So that's how to spot trend using trend line, and this is an uptrend. You just drag it into the future. And let's move on. I've already spent 38 minutes just already. Let me clean this real quick. There's a reason why I'm taking much time on this and talking about it in depth, so that you would know these are the rules that you have to follow, right? These are all the rules that must be followed to make money off of the forex market. I told you about the rules before, that you need to follow rules. If you don't follow rules, you're going to lose money. If you follow rules, you're going to make money. So moving on. Now, this is a downtrend. Downtrend, using trend line to recognize a downtrend. Now, to draw a trend, you don't need to the trend line you are drawing must not go into the trend, the market. If it goes into the market, then that's wrong. That's very, very wrong. Your trend line must not go into the market. As you can see, the trend line is just at the tip of the market face. The trend line doesn't have to touch any of the candle to be a trend line. The only thing the trend line needs to touch is the wick. On the body of a candle, there are what we call wicks. And when we were talking about candlestick analysis, how to recognize a candlestick, I'm going to go in depth on what a wick is. So as you can see, the trend line going down, it doesn't enter into the body of the candle. It only touches the wicks. And for the traders that are conversant with on the forex market, and you draw your trend line touching the body of the candles, that is extremely wrong. It shouldn't touch the body of your candle. It should only touch the wick of the first and second. Then after you draw it and make it touch the wick of the first and second, then you move it into the future. You see that it will just match with the trend. You don't need to put the trend line into the body of the market. That's extremely wrong. These are rules that must be followed to make money in the forex market. We are going to have a lot of classes, and you're going to learn, and you're going to know it, and you're going to make money. If you follow rules, you make money. Don't follow rules, you're not going to make money. So this is a downtrend line. We actually spot the market using a downtrend line. Okay, moving on. Now, remember I said there are two ways to spot trends. That's using automatic raw market movement. You can use the higher high, higher low, or lower low, higher low to spot a downtrend and an uptrend. And I also mentioned that you can use a trend line. We discussed about that just some few seconds ago. And I also mentioned EMA, which actually means exponential moving average. And in this case, we are going to be using 200. We're going to be setting it to 200. As you can see on the chart, you can see a white line on this black chart. You can see a white line going up. Now, that is what we call EMA. That is EMA. I think I should change the color of my I need to change it to like white or so. Where can I get white? Okay, let me just use, okay, I can get white. Yeah, done. Because it's a dark chart, I need to use something white so that you would see it very well. Now, look at this trend now. You can see that there is a line, this line going up. This line. That is what we call EMA. It dictates where the strength of the market is. As you can see, this is an uptrend. When price is above the 200 EMA, automatically it's an uptrend. When price is above the 200 EMA, as it is right now, automatically it's an uptrend. And all you are looking to do in an uptrend, remember, is buy. You are not looking to sell on an uptrend. You are looking to buy, because what is the market doing? The market is going up. When you sell when the market is going up, you're going to lose money. But when you buy when the market is going up, then you make lots of money. Now, this one, this is the daily, this is a daily chart. Now imagine this movement from here all the way up here. That's about 1,000 pips or so. That's like about 1,000 pip, and that's a lot of money. If you stake this, let me say like 1 cent lot size, 1 cent lot size, then you, for the small account, for bigger account you can go higher, but for the small account, 1 cent lot size from this point here up to this point here, you I think you'll be making nothing less than $500 on that, I think. Yeah, if I'm not wrong, at least $500. Okay, so this is the 200 here, recognizing an uptrend using the 200 EMA. How to spot it, an uptrend using EMA 200. That's what we're doing right now. We are discussing about how to recognize up and down trends, because this is the most important. Apart from candlestick analysis and all those other stuff, you need to know what the trend, what is this trend, what is it saying, what is the market saying. Is this an uptrend? Is it a downtrend? That is the first thing you need to know when you open your chart. I need to repeat this. The first thing you need to know when you open your chart is this an uptrend or a downtrend? Is it an uptrend or a downtrend? And these are the tools. There are only two tools I use. It's either I use the trend line, or I use the 200 EMA, exponential moving average. I need to always repeat this so that you get it. This is very, very important. These are rules to be kept. You should even bring out parts. You should bring out your notes and even jot some of these things down so that you'll be able to go back and check every time you look at your chart, because it's a rule and it must not be broken. Okay, moving on. Now, same thing as the uptrend, using the 200 EMA, exponential moving average. This is a downtrend. You can see that price is just below the white line, and that white line is the 200 EMA. Oh. If price goes above the 200 EMA and bounces off of it twice, then you'll know that the 200 EMA, the uptrend is valid. But right now, price is below the 200 EMA. You can actually notice how when price goes up and touches the EMA, it automatically bounces down, like immediately. Immediately it touches the 200 EMA. You can see how price just bounces off of it. That's what you need to know. That's how strong the 200 EMA is. And even if you to draw like a trend line on this, it's going to match perfectly. So this is a downtrend, spotting a downtrend using 200 EMA. Let's move on. I've already taken a lot of time. Okay, so I mentioned that the market moves both ways. There are three ways. There are three ways the market moves. It's either it goes an uptrend, or downtrend, or sideways movement. Now, how to know a congestion using 200 EMA? When the 200 EMA is just in the middle of the trend, just know that it's a congestion. Equal top and equal bottom. You can see the white EMA. I know there are like about 3 white lines there, so I need to bring out my pen to show you what I'm talking about. Now you can see this white movement inside the chart. I don't know why my pen tool is being a bit slow today. It's becoming irritating. You can see how the trend, how the 200 EMA just goes into the chart, right? It goes into the chart formation, the formation of candlestick. The trend and the EMA is just in between them. So that's how you cannot do anything right now. You have to make sure that it's either an uptrend, it's either above the EMA or below it. You cannot trade this right now. It's just congestion. It has no direction. Remember, you have to trade a direction. If the trend has no direction, then you stay off of it. If it's just sideways, just congesting like that in a range, just congesting up and down, you don't go after it. You just leave it. Let it do its thing. When it have a direction, then you follow the direction it goes. That's just it. Clean this off. I know I have a problem of cleaning, like tidying things off before moving on. I know, right? So, continuing. The next thing we're going to be learning is how to spot a congestion using trend lines. Now, just like the how we spotted a congestion using the 200 EMA, using a trend line is different. A trend line, you put a trend line on a chart on your own, whilst a 200 EMA automatically moves with the market. So a trend line, you put it on your own. 200 EMA moves automatically with the markets and predicts what the market is saying. Now you can say on the chart that, okay, and let me zoom this in. We were originally on an uptrend before. You can see it on the chart. We were originally on an uptrend before. You can see the trend line running through, and the trend line got broken, right? It got broken around this section here, right? And what happened after that? What happened after that? You can see that it's neither a downtrend nor an uptrend. The market keeps going up, down, up, down, up, down, up, down, up, down. There is nothing here. There is nothing here, absolutely nothing. It's not going anywhere. It's just going up, down, and this is, don't trade this until I teach you how to trade this. Don't trade this. Wow, I just tidy this off the screen. I don't know. My pen tool is being irritating today. Very, very irritating. I'm too slow. Being too slow. Okay, let me just leave that. I don't know. Isn't there anywhere I can just erase all? This is very, very irritating. I already erased all before all this. Okay, I think it's back now. Okay, now you can see immediately what you have to wait for is for a low, and you can see a white line going through the top of the range and the lower part of the range. Now the reason why I put this horizontal line is so that we can know when a trend begins. Now if the price ventures up and breaks the horizontal white line above, then we immediately draw a trend line matching that. But as you can see, the market actually broke the horizontal line I placed below the market, and you can see that immediately I brought out my trend line and I fixed it there, because the range has been broken. Now it has been broken down. That's why I brought out my trend line and I place it on a down movement so that I can recognize where to start selling, because it was on the market was confused before, but now it has shown me a direction. Now I have to follow that direction. So that's how it works. That is how it works generally. Oh, moving on. Now, these are trend reversal, head and shoulder formation. Yeah, what we call trend reversal. Oh, sorry. Oh, I must have. Okay. Now you can see in this this previous slide we looked at, you can see that okay, it was congesting and immediately it started going down. Now the trend was on a uptrend. Immediately it goes into a congestion, then it reversed from being an uptrend into being a downtrend. Now there are some key formations of candles that we need to look at to understand when the market is about to turn. And there are some formation, and this formation is what I call the heads and shoulder formation and double top formation. Heads and shoulder formation and double top formation, or inverted heads and shoulder formation and double bottom formation. So right now, what we have on the screen to the left hand side is what we call, I need to change my pencil again, the color, I need to change it to a darker color. We're on a white page. Done. So to the left hand side, what we see right here is what we call an inverted head and shoulder. An inverted head and shoulder. And what we see at our right hand corner is what we call head and shoulder. You can see how it looks. It looks like this is a shoulder and this is a head and this is another a shoulder. My pencil is being slow. You can see how it looks. It's looking like your shoulders and your head popping out of it, just like how it is on the right hand side or the left hand side of the screen. Like it looks like the head and shoulder is turned upside down. Now when you spot something like that on a downtrend, just know that okay, it's about to break. It's about to the trend is about to reverse to the upside. So these are some key things that you need to know about trend reversal. Let's just clean this off of my chart. Don't make my chart looks messy. The board looks a little bit messy. I think I need to make this eraser a little bit more big. It's not working right. I don't know how big this is. Okay, it's the eraser is the biggest. Okay, let's just go. Okay, let's just continue. So this is a reversal head and shoulder formation, and let me just go straight. I've taken a lot of time already, or close to 1 hour. Wow, this is wow. This. Okay, let me just put it. Okay, and let me just continue. We have a lot to cover today, and I have to do it real fast. So this is a trend reversal double top. So this a trend reversal double top. When this happens, it automatically signifies that the trend is about to change from being an uptrend to being a downtrend. The same thing happens on a downtrend when it wants to reverse to being an uptrend. You can spot something like this, and we call that double bottom. I'm going to show you in the next slide. But imagine drawing a trend line at the left hand side of the screen. Imagine drawing a trend line through this, and it starts showing you this. You automatically your trend line has been broken. If you are to run a trend line through to the left hand side of the screen, you'd see that your trend line would have been broken, and you should run a trend line through it. When the trend line is broken and you see a double top like this, then you wait until the neckline has been broken. You wait until the neckline has been broken somewhere around here. This is what we call a neckline. That is what we call a neckline. Once that is broken, then you know that okay, we are in a downtrend. We are already in a downtrend. You can see how the trade just goes down when it broke that neckline. It just goes down. That's what I mean by breaking the neckline. After this video, I know I cannot explain it to satisfy everybody. You can, after watching this video, you can actually come into my WhatsApp, and ask me any question, and I'm going to answer them. When I answer them, I'm going to be posting them on my WhatsApp status so that everyone will see the question and everyone will see the answer, so that it will help in clarifying. If some people didn't have that question, they might even learn more. No matter how stupid the question, you think the question is stupid, it is not stupid to me. It's actually going to help you. That could be the key reason why you would make lots of money from forex trading. You can see it, and now you can see to the right hand side of the screen, that is just an illustration of a double top or double bottom. If it's reversed, then it's a double bottom, but right now it's a double top, and you can see how the red face, the neckline, that's what we call the neckline, where you see those red circles. That is the neckline. Once it breaks the neckline, it comes back to retest that neckline. Then when it retests that neckline, and I need you to understand this, only when it retests the neckline, that is when you sell. You don't just rush. I told you before that trading is about patience. It's all about patience. You have to be patient with the market. You have to follow rules and be very, very patient. The market will do what it will do. You just have to follow it. That's just it. You just have to follow it. What it's doing. Just follow the market. Don't try to battle the market. You will end up losing if you battle the market. Just follow it. It's your friend. A trend is your friend. Just follow the trend. Okay, moving on. Now the double top. This is a double bottom here. A real life chart double bottom. You can see how it just shows what I explained before. Immediately it breaks the neckline. Immediately it breaks the neckline here. Immediately it breaks the neckline there. Then you see that the trend just reversed immediately from being a downtrend into being an uptrend. So let me erase this off. Okay, moving on. There's a double bottom. Okay, I think I've come to the end of this. I didn't know this is actually the end of this session. Sorry about that. Okay, so this is the end of this session. I just wanted to make you guys know what you need to look out for in the forex market, and this is one of the most important, this is the most important part of forex market. I needed to go into chart, into this for you to understand what we're here to do. We are here to trade forex, right? I cannot just keep telling you about histories of trade, history of forex, and not really go into teaching you forex. The history, you can always get the history, but I just mentioned a little, that's a little bit of the history of forex, about being about introducing forex to retail trader in 1994, and forex market being like 1.5 trillion dollar market, everyday market, and all those what I mentioned at the beginning. So it's just a little bit about the history of forex. There are lots more history. I have read lots of books. When people study to become a doctor or study to become an engineer, I studied forex. Like, that is what I studied. That is what I am still studying. You would never stop learning. That's just it. And that is what I study. I've read tons of books regarding forex market, and that is why I am where I am right now. So this is the end of this session. Um I don't know if I should do a recap, but I believe everyone has seen everything so far. What we've learned about reversal pattern and the heads and shoulder. We've learned about the double top, double bottom. We have learned about congestion and how to spot congested market, an uptrend, a downtrend, how to spot them, everything. Now that is more in depth into forex. Now we actually studied raw market movements too. So that, I just want to do a recap of everything that we've learned so far. So yeah, that's just it for the first class, and I think maybe next week so I'm going to do another class, and I'm going to post it, give you the link to it, so that you learn more. Next week, I'm going to be talking about candlestick analysis. I might even introduce you to the MT4 in the next class, and how to use them, how to use the MT4. I don't know yet, but this is just a little, and I thank God that this has been a success, and I hope you guys learned one or two things from what we learned so far. So until next time.